weekend all. Ira Epstein of Linn and Associates with your weekend edition of your SPDR ETF video, and this is for Friday, December 4th, 2020. On the weekend, we just look at weekly charts, so that's what we're going to do. Now, once a year, I come up with specials for right in front of the Christmas season. And this is one of the specials. It'll be a limited time offer. It won't run through Christmas, I can tell you that already. I'm giving away my charting course for free. Want to know how? I'll explain it right at the end of this. Let's go into what's moving the markets right now. The markets are enamored with the idea of relief packages. The market is not taken back by the COVID news, which is overwhelming the hospital system in America. It's looking down the road and sees in Italy and Spain there's signs of plateauing of cases. We're typically 2 to 3 weeks behind Europe in the COVID issue. And it's looking at that and saying the vaccines are coming, what's taking place? Because otherwise I would think you'd be basically, the markets would have not reacted the way they did and had these strong November and December. So the market's looking at the glass as half full, and we've got water here in a pitcher. We're ready to fill the glass up. And if they can get a COVID relief bill agreed to, which would be amazing, in front of Christmas before Congress leaves, who knows? Can it happen? It certainly can, but time is running out. You know there's going to be a battle with the president over the defense bill. That's staring us right in the face. The House claims they have enough votes to override a veto. We have to see what the Senate will or won't do. The president is not in favor of this bill. Will he want one of his last moves to be that? Don't know. Will the president be willing to accept the COVID bill? Let's assume that they reach the $900 billion just for that. And his last signing of a bill is another $1 billion of relief. Well, there's two ways. His last signing helps people. That's one thing. I don't think you're going to get him to sway on the defense bill unless he just says he doesn't need a veto for his last thing. I don't know. But that package, it's going to bother him with the social media that's in there. So let's take a look, if you and I could, at what we've got. We're going to build the weekly chart first. I'm going to stay with XLK. PAVE is in this. I'll show it to you right after this one. Here's a package where the market still hasn't taken out these highs, but the trend is with the swing line. I think you can see you have a pattern of higher lows and higher highs in place. You've had this for a while. If I take off this week's data, you had the higher lows, higher highs. So it didn't just happen. It's been here. You'd have to, in order to stop this pattern, take out the 119.04. That's the last break low you had, which is last week's low in the market. When we take a look at moving averages, the market is staying over them. It has tested them, but it gets thrown back on each test. As long as the market stays over the 18-week average of closes, the bias of the market is up. Where could resistance come in? One of the numbers would be the upper Bollinger Band, and that number is right here, staring you in the face. The market has been having just as difficult a time getting up and over that number. And you only stay over a Bollinger Band 5% of the time. Now that doesn't mean you can't string together a series of losses or get a couple of times where you're over it 5% of the time. It also doesn't mean you have to turn away sharply from hitting it. But so far, we haven't locked on to that band. Rather, we've gone up and given it a kiss, and then the market slips right on back. That's what this market has done, and until it changes its pattern, well, that's what I'd expect. What could change its pattern? It could change if you had an embedded reading, just like this, when the red and the blue lines are going sideways over 80 the way they were here, and then they married that band. But more times than not, when you just get oversold or you get overbought like you are now, you kiss it and you turn back. That's all I can say. Here's PAVE. I am friendly this because I believe that one of the big bills that will hit America is going to be the attempt at infrastructure spending, which we desperately need. Is the timing right? It's right. Money's cheap. Put people back to work that we've just taken out with the COVID, It reminds me of, Roosevelt times. I can imagine this happening. So I have decided to cover this because I believe that that's one of the things that could happen. The trend is up, and as you can see, we're now rallying into the resistance of the upper Bollinger Band, where I'll look for the resistance to finally show. We are also overbought. You'd have to take out 2034 to break the uptrend. In XLI, the market had 3 weeks in a row over the band. It tried to stay under it. It didn't. Today's close is back over it. It's 4 weeks in a row. That gives me in my head a 1% chance that the market will stay over the band next week. Why? My rule of thumb, and it's just that, is that each consecutive week over the Bollinger Band takes away one of the 5 percentage points. Now, go back and look and you'll see how often you adhere to that. It's amazing. That doesn't mean you can't get 6, 7 or more. I've seen it and you have too. First of all, the idea here isn't that you're getting bearish the market. It's a sign of strength. The idea is that you're going to be able, if you want to get into the market on breaks, be able to do it than buying over the Bollinger Band. Does it always work that way? No. And the second part is when you latch on like that, when you get those breaks, if you have an embedded reading, typically the breaks are shallower than you're expecting. You'd have to lose the embedded reading where the red line's back under 80 for me to change my mind. So a sign of big time strength there, big time. XLE, well, all you've done in the energy sector is in 2 months go from the lower Bollinger Band to the upper band. So that's nice. You're overbought. You're at a resistance point. I'll let other people do things with it. And my take on OPEC was it was a good meeting, not a bad meeting. Why? Because OPEC has decided that rather than say, hey, we're going to produce 700,000 barrels a month more up until March as an example. No, I think the calmer, better thoughts prevailed. And they said, listen, as a group, we're going to produce 500,000 barrels more. I don't know the allocation, how they're going to work that. But we'll review each month while this COVID situation is going on, what's taking place right through March. What's so bad about that? The market's at a high price, brings more money into their coffers. Americans, we're still producing and exporting 40 million barrels of oil a day. If you get my written research, you saw me put out a chart about that today. EFA, the emerging markets. This is the power market that everybody wants to be long. Now, last week, if you take a look, the market finished at 71.71 over. That's 3 weeks in a row coming into this week over. Here's your fourth. You're pulling on that band. That's my point. You're trying to embed, but are you there? Well, both numbers were over 80, both over 80 last week, but not the week before. You're just overbought. I'm looking for the market to pull back to the right-hand side. That does not mean I'm bearish. It means I think there's an opportunity on breaks. What else has happened? Let's take a look together right here. On this week, which was last week, you had the 18-week average under the 200. You had a bullish crossover and you're making the new highs. So this market is just continue to line up with bullish crossovers on everything. Certainly not a sign of weakness in any manner, but overdone to the upside on this particular time frame. In the gold, all we did is go back to the lower Bollinger Band and come back over it. Now here we got over the band for a 3-week period and then boom, you fell back, fought at the 18-week average, now you're down here. To say this market is at least thinking of bottoming out, I really think you got to get over 177.91. Haven't done that yet, so it's a bounce in a bearish oversold market. When we come to GDX, the market turned back from 2 weeks under the lower band to the right-hand side. Again, that 5% rule. Coming in, you had a 3% chance of staying underneath that band. So, not bullish. I can see that the market's got a higher high, lower low, and it's overdone. Let the chart set itself up. SLV. The Daily charts throw out a buy signal, but you don't have that on the weekly. So there's a discrepancy going on the silver futures and what you have here in SLV. The market made its attempt this week to get to the lower Bollinger Band. It did miss it by 9 cents, but you have an outside week up. In order to get and say that this is anything but an attempt at a bottom, you've got to take out this week's low. Now, should you take it out over the next 2 weeks, it would be an ugly move. If you don't, and you can get up to the 2350 level, you still got plenty of resistance. So is SLV in any manner a buy? Unfortunately, it isn't, but it's also signaling that it doesn't want to be sold anymore. That's my interpretation. TLT, as I said, every time that we hear that Congress can be getting close to making a deal on a relief bill in some manner, you put pressure on this market. But something else has happened. Instead of the market going up, it's been having an easier time coming down. I think that we're getting to these watershed moments. I think we're there. I think that the idea of getting back to interest rates going in America towards zero and getting through that 0.5 range and the anything beyond 20-year, I think that's over. And I question now if the market hasn't seen the lowest of the rates. That doesn't mean they're going to march on, because the Fed will make sure they don't march on, or if they do march, it's going to be a very gradual move. But that's what I think is going on. I think higher rates, not lower rates, are now on the horizon, and that's what that chart said. And when we come to the euro currency chart, we'll take a look. You're up and over the upper Bollinger Band. You won't stay there long, in my opinion. You'll get your opportunity, but as I said, I think the dollar's in serious trouble, and I think that traders are recognizing that. Jets, what about here? Look at how this market's moving itself on up, staying over the upper Bollinger Band. How many weeks in a row? One. This week, we had closed at 22.64 over the upper Bollinger Band. So that's 2. 3, 4. We'll see if you can get 5. Got my doubts. Resistance, 24.94. By the way, if you get 5, maybe you can go to 6. The point is, I realize it's friendly, but it's overbought. It's pulled like that. I'd be very careful. Last, our DBA, the Invesco Ag Fund. What do you do when you hit an upper Bollinger Band? So long, boys. First time you hit it, you're typically topping out. You'd hit it here, you backed away finally, came back up. That's a lethal combination. Momentum turning in this chart, trying to turn and lose the embedded reading, which could carry you back to the 1481 level should that set in. Now, what I said to you was I'm offering my charting course for free, and let me explain it. By any of my research on a 1-year basis, and it's not expensive. I think this video runs about $159 for the whole year. And you get the course, which is $199.95 with the charting software and everything for free. You can give it as a gift. You can give this as a gift, keep the course. You can split things up. That's going to be up to you. Just let us know. But this is a limited time offer. You know what I cover, and I keep adding more and more to all this. And I think you'll find it works out in a pretty neat way. Don't believe me? Take a shot. Buy the 30 days. Look at it for a week or two and see what you like. If I see that you bought now and you were waiting to view it, I'll work with you. But this is going to end quicker than you think, because I won't make money giving away the course. This is my loss leader to get you to come into our fold. How do you do it? Go to our website. Under the word research, it's explained. The charting course is under education, it's explained. I've sent out an email on this to everybody in my mailing list, but there's a lot of people, both here and abroad, that aren't on it. If we see you buy a 1-year deal, we will honor this. I own the company, so you don't have to go any higher than me. It will happen. I'm Ira Epstein. You have yourself a great weekend, and I'll see you all come Monday. Take care now.